Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for chapter 10, the group B exercises. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. All right, so we're working on 10-44 here. And let me get my pen. Okay, so we're accounting for various stockholders' equity transactions. All right, so it says December 31st, Ferdinand reported the following stockholders' equity. So this here is the stockholders' equity section of the balance sheet, right? So during 2014, Ferdinand completed these transactions and events in this order. He sold 500 shares of treasury stock at $35 per share. The cost of these shares was $29 per share. Issued 1,100 shares of common stock at $20 per share. Net income for the year was $203,000. Declared and paid cash dividends of $40,000. Now, notice the requirements. It says prepare the statement of stockholders' equity for the year ended December 31st. Right. I reproduced the solution and put it here because I'm, taking the amount of time to just making columns, whatever have you. It's inserting a table and doing that just way too much time. I can just as easily just explain the math as we go along here if I need to be, or doing as if I was doing it, all right? But the point I want to make here is that we're talking about a statement of stockholders' equity, okay? It's a statement of stockholders' equity. It is not the stockholders' equity portion of the balance sheet, okay? This is different than this, right? When in the very first chapters of the textbook, it was explained that every business has a balance sheet and an income statement. Okay, those everyone has. Then beyond that, the next statement that a lot of businesses create is the statement of retained earnings, and then the statement of cash flows, right? Which you'll see that in the next chapter. Okay. These are the four most common financial statements that are created, but that doesn't mean that's all the financial statements that there are in the universe. In this case here, we're creating a statement of stockholders' equity in order to be able to explain what is in the stockholders' equity section of the balance sheet. So just realize that there is a difference between the two. You have to pay attention because if you're creating the balance sheet, you're creating this, but if you're being told to explicitly create a statement of stockholders' equity, it will have more of a tendency to look like this, although it doesn't have to look exactly like that. Okay, these additional statements that are created, they're created based upon whatever the need is, and it presents the information that is necessary. All right, it just again, it's about generally accepted accounting principles. They're principles that apply to everybody and everybody has to follow them. But when you're following them, your statements can look different, okay? But because everybody understands the principles and the concepts and the theory, they understand what they're looking at, even though the information is presented in different fashions. Okay, so when we're looking at the statement of stockholders' equity, it's very, as I glanced at it here, you have a beginning balance and an ending balance. And remember, in your statement of retained earnings, you had a beginning balance, right, as of a date. And then you added in your net income. Then you took out your dividends and you ended up with ending retained earnings by that particular date. And if you notice that this is being created in the same fashion, all right, we're starting out here with a beginning date, and we're finishing with an ending date, all right. So our beginning date, we put in the different columns for the different things that we need. Okay, so my common stock of 840,000 goes there for common, and then I have my additional paid in capital of 145, which goes there. Then I have my retained earnings, all right, from my balance sheet, and then I have my treasury stock, which goes here, and of course the total amount of my equity. So that's my balances as of December 31st. And as you can see, all they've done so far is taken this and stuck it over here. Okay. Now we have these additional transactions. So we're selling 500 shares of treasury stock for $35 per share. The cost of these shares is $29 per share. So we're showing the sale. Okay. And 500 shares at, get my calculator, 500 shares at $35 a share is $17,500, right? So that's my total amount, but it is broken down into, the cost of these shares was $29. So 500 times 29 is $14,500. Okay. 500 shares at $29 a share is this $14,500. And of course, the difference between the two is the $3,000 of additional paid in capital. All right. Let me just quickly go back over that. So we're looking at the sale of treasury stock, right? All right, we're selling 500 shares at $35 a share. So 500 times 35 is $17,500. But the cost of the shares is $29. So 500 times 29 is $14,500. And the difference between the two is the $3,000 in paid in capital. Okay? If you're making those journal entries, that's exactly what you would have been doing, right? You would have debited cash, right? 500 times 35 is 17.5. Credit my treasury stock, and it's at $29. So 500 times 29 is 14.5. And the difference between the two would have been the paid in capital in excess of par of 3,000. Okay. So basically what they're, if you see what I'm doing here, this is the information as the dollar amounts that would have been there if I created the journal entry. So, you can look at it from that perspective of, they're just kind of like skipping over the stuff and saying, okay, we're not, we've created the journal entries, we've posted them, these are the balances in the account, but this is what it looks like on the statement. All right. So if you're having a little difficult time transferring this idea here over to this, then actually create the journal entries. All right. But I'm not going to continue to do that. All right. So B is issued 1,100 shares of common stock at $20 per share. Right. So 1,100 shares at $20 is the 22,000, right? Right there. Now, 1,100 shares at $6 par, right, is $6,600. So we're creating an additional $6,600 in common stock. And of course, the difference between the two, right, is the $15,400. Right? Okay, so that's that. And then it says net income of the year was $203,000. So we are putting in the net income, total of $203,000, and the net income goes to retained earnings. So that's why it showed in the retained earnings column. And then it says here declared and paid cash dividends of $40,000. So they're showing the cash dividends of $40,000. And of course, that's a payment out, so that's why it's a negative $40,000, and it comes out of retained earnings. So that's why it's a negative $40,000. And then it's just simply doing the math to get the rest of the solution. Okay, doing the math in the columns. Okay, so then you end up with a balance in your stockholders' equity section of $1,793,700. Okay, and if you went and said, okay, this is for the year end December 31st, let me create a new equity section. Well, instead of 840,000 here in the stock, common stock, I'd have the 846,600 instead of 145,000 for the paid in capital. I have 163,400. Right? So that's all I'm doing is just replacing those numbers, all right, and creating the new equity section of the balance sheet. Okay? But this here ends up being the detail of what happened, for that accounting period. Okay. All right. So if you have any questions on that, feel free to telephone and speak with an instructor. It's relatively simple. All we're doing is just, as you can see, instead of journalizing the transactions here, we're just showing it in this fashion on the statement of stockholders' equity. And then if we have to, we can use that information to create a new stockholders' equity section of the balance sheet. All right, so with that said, again, if you have any questions, feel free to telephone and speak with an instructor.